To another live analysis for the gross domestic product from US this time. Thank you very much for joining us today for this another actually important economic update. I'm Andrea, and I'm pleased to be joined by my esteemed colleague and co-presenter right now, Francois.
Thank you, Andrea. And it's, as always, such a pleasure to be here with every single one of you. And we are ready to take you through this absolutely exciting event here today.
You're absolutely right. So today we're going to discuss another important, as I said, significant figure out of the United States. Despite that, this is served to be as a very critical indicator for the overall health and performance of the nation's economy. I cannot really avoid starting this analysis with gold. I'm sure that you're really, really keen to discuss gold and the latest spike that we've seen. Actually, a huge spike that we have seen this week, a very interesting development, reflecting significant shifts in investor sentiment, and actually could give us some clues in regards to the economic stability or instability, if you prefer. So, what's your view in regards to the gold and that huge spike that we have seen today in the whole week, actually?
So, absolutely, I couldn't agree with you more on that, Andrea. So, yes, if we do look at what gold is currently doing during the week on Monday, we saw some consolidation. Then, yesterday and today, we have seen a massive, massive rally in gold as investors are moving away from the dollar, and there's a certain amount of fear coming into the markets again because of the fact that traders and investors are seeing that the US economy is weakening. And again, that is why this specific report here today is so critically important. So, for those of you here today that this is your first time trading the GDP event, let me just explain a little bit more. So the gross domestic product report, so our GDP, represents the total monetary value of all goods and services produced within the borders of a specific country. And today we are going to look at the USA. And this is also, the report also has different factors with regards to the time period on which it reports. This is absolutely a key measure that helps us understand the economic well-being of a nation. So today, as we are looking at gold, this is going to be a key indicator that will guide us going forward because of the fact that today we are expecting, and I'm sure Andrea is going to elaborate on this just now as well, but today we are expecting a strong GDP. We are expecting that figure to come out a little bit higher so we can see that, you know what, the US economy is still doing well. At, as you are seeing on the gold charts as well that Andrea popped up for us there,
Let
we
me
are at
share also the since you're talking about the figures today. Let me share also the calendar so we can
perfect,
also.
perfect. So if we are not getting that strong GDP report today, gold can continue on this rally. And although that is something scary to mention, from my side as well, I don't know about you, Andrea, but that's also a little bit exciting because the fact that we are at high points that we haven't seen in a very long time.
Absolutely. Actually, is not this time is not just a set of statistics. It's not a set of another economic report, especially after all these, after market performance this week. It has been a very, very important report to be seen and actually to see how the markets will comprehend and how they will understand the upcoming report. So it's all about how the markets will react, how what's their view, what that indicator will show them. Is it gonna keep? Is it gonna give them a reinsurance in regarding to Fed's next action? Is it gonna add further uncertainty to it? So I absolutely agree with you because other than um, other than a sign to give us the financial narrative of the US time is very, very important also for any indication in regards to the Fed outlook for 2024. So I'm not sure whether you agree with me on that. It might be just another monthly reading. And I feel that it will indeed affect their views for the for the upcoming year, at least for the first quarter.
On this regard as well, I fully agree with you because of the fact that, as we have spoken previously, when myself and you have done sessions like this and so forth, when we do look at how the market is reacting at the moment. Now, I know myself and you have said previously, that the market sometimes overreacts a little bit, but I think this week it's been a massive reaction. I think our reaction this week has been really big, and this is also an indication to show that the rest of the market agrees with us on this. The rest of the market also feels that, what, this specific report that is being released today is of such significant value, especially going into 2024. This will be um, that key indicator to show us,
Mhm.
as we are going into 2024, are we going to start seeing interest rate decreases? Are we going to see a weaker US dollar? Are we going to see a weaker US economy? Potentially even a recession? There's so much building within that specific economy. And that is what is making today such a critical event, to say, what, either there is still strength within the dollar, or all the speculation is correct.
I totally agree with you. And actually, especially after yesterday's, I don't know whether you have followed a bit the policymakers' comments. I'm sure you have already done that. Uh, Especially after seeing such a hawkish member of the Fed, I'm referring to Wallers more precisely, having such a dovish tone, I'm just wondering whether it's some kind of just to give a bit of of a relief to the markets ahead of the GDP. Is it indeed his view? His view has changed, and it doesn't no longer sees any further need for further tightening. So but definitely, yesterday's Fed speakers shake the market significantly, and we can see that from the gold as well, dollar, actually all over the place. Um, let's not forget that central bankers in general and their comments are shaking the markets for the whole year, for the last 2 years, I should say. We have someone that agrees with us with us over here. We have some comments. Hello, everyone. So I think so. Anu is saying that I think the news is going to be bearish. So, so you're seeing that the GDP. So I guess you are referring to a possible miss in the GDP today. This is,
I believe
um,
so. I believe so.
yeah.
So I think the comments are showing here that, even though the general sentiment as well today is a stronger GDP, that some of our traders are believing that it's going to be a miss today, and we might see a decrease and it come in lower than our previous reports. So this is definitely a possibility.
Mhm.
So yes,
There is a bit of a debate over here in our attendees chat over here. Press, I think it's going to be bullish. Hi, everyone. Hi, welcome. Okay, a bit of a debate, a bit
yes,
of a contradictory views. Why not? Who knows? We're gonna come to the dollar in a bit, dear. Let's will be strong or weak, as Francois explained earlier. If we see significant growth on GDP today, that's something that could support the dollar on some potential bets that the Fed might delay rate cuts. But yeah, let's wait and see for the figures. We are still around 20 minutes away from the figures. Shall we discuss a bit the numbers as we shall we delve into the numbers a bit, even though have plenty of time until they become available? Or would you like guys to go through to scan a bit the markets, or you have any fundamental questions until we see the numbers becoming available? Is the GDP released yet? No, I'm afraid not yet. We have another another 20 minutes to go until then.
Some of our traders are eager here today. They just want to get into the market. They want to get trading. But yes, I think if there's no additional
Let's
questions, maybe let's put the calendar up. Let's discuss some figures in that regard to see
yes.
how today might actually go. Because yes, if as we said, and as you also just reiterated as well, and I think this adds on to the question that we had here with regards to, is DXY, so is the dollar index going to be strong or weak? And at the end of the day, and from this perspective, I always talk about this perspective from of a trader's perspective. So yes, as an analyst, there is a lot of things that we go through, and we have a look at certain key indicators to say this is the possibility of a stronger GDP report, which would lead to a stronger dollar and a weaker dollar. But I think for some of our traders here, it's also very important to remember that as a trader, your profitability is based on your ability to react to what the market is doing and not to make predictions, because
Mm-hmm.
sometimes we get stuck in our biases and we want to just say, you know what, we're going to have a stronger dollar, stronger dollar, stronger dollar. And by doing this, you are automatically putting yourself on the back foot and you are putting yourself at a disadvantage. I don't know which one of our traders here today, I think there are quite a few that joined myself and Andrea a couple of weeks ago when we traded CPI. Now, before the time, myself and Andrea agreed on the fact that we were going to see some weakness within the dollar and so forth, and this didn't happen. So, and then we changed our sentiments a bit and we discussed a little bit. And again, as analysts, this is exactly what we do. We change our minds often regarding how we look at various policies and based on different economic indicators and so forth. But as a trader, you need to then take that data and be able to say, okay, here's all the information that I have. And once the data gets released, how am I supposed to react to this data? What am I supposed to do now? Am I now supposed to go long or short? Am I buying or selling? And this is where your profitability lies.
Exactly. Trade what you see, not what you think, right?
Couldn't have said it better.
So
Couldn't have said it better. I spoke for
it's
5 minutes. She says one sentence and it summarizes everything. Come on.
it's my motto. You know, I have it. I actually literally have it written down, and I have it as a post-it on my PC. It's something that says it all, because it's exactly for the reason you said. Sometimes even it's not our perception. Sometimes fundamentals might not agree with the actual technical analysis. So for various of factors, but yeah, so it's better to check your chart, analyze your chart, check your momentum, and actually trade what you see. Always the trend is our friend. Remember that. Don't get blinded by what you think that will happen, or what maybe some others told you that it will happen. Sometimes a lot of people are actually they they are pretty much affected by forums and etc. Try to educate yourself and try um, to decide, take your own decision. So. I have put the calendar on. Okay, as you can see, guys, the third quarter gross domestic product is expected to have an upwards revision to growth. So whether that 5% will be beat or not, we're waiting to see. But in general, you should know that there was so far a strength in the last few months. We've seen actually a recovery, a bit of a strength, and mostly coming from the strong consumer spending. So responsible for the main factor, let's say, from the strength that we have seen the GDP the last few months. It was the strong consumer spending. So actually, it is expected that the economy will slow in the fourth quarter, but yeah, we need still further indications that this will happen. So, let's check a bit our
Talking
questions.
about consumer spending,
Yeah, sure.
so as we are going into holiday season now and we're going into that holiday spending, we obviously know this time of year, especially with a lot of retailers, especially in the USA, there is a lot more spending going on. We just had Black Friday, we just had
Yeah.
Cyber Monday. All this adds to that, consumer spending. So what is your thought, and how do you maybe feel that this is going to affect the market short term if we're looking at going into December? Do you think that we are still going to have that consumer sentiment and that consumer spending increase, or do you think that the market might actually start cooling down and the higher interest rate could start taking an effect as we are going into Christmas season?
Actually, as you said, you mentioned the near term. We can see actually. I've seen actually. What one was it? I think it was Friday. Yeah, it was. No, sorry, it was Monday morning. I saw a nice chart from Reuters with what is anticipated to be the consumer spending, that the Black Friday, this year's Black Friday, and it was a step above last year. It's like an upwards trajectory year after year. So in combination with the bounce that we have seen yesterday, because we had also the U.S. consumer confidence yesterday, another bounce, not significant, still away from a downwards revision of the 15-month low, but still a growth. So in the near term is the key. I believe that based on the consumer confidence, based on what I have seen from the expectations about Black Fridays, spending, holiday spending, and etc., in general, the Thanksgiving, and consider the seasonality that we have as well, uh, we should see the consumer spending to show in the near term further strength. So, and it's not only that, actually, it's not only the confidence, not only the holidays. In general, we've seen other important indicators such as Michigan sentiment also yesterday decline a bit, but still well above the bottom that we have seen in 2022. So well above that level, triple a number if I'm not mistaken. So confidence is still slightly supported, moderated since the mid of 2023, but still on the upwards in the near term. So yeah, so in the near term, yes, I believe that we will see at least until the year end, and just a month away. Actually, we are just a month away from the year end. So uh, yeah, that we're gonna see still some upwards revisions. Something
Brilliant.
that it's not really something that the Fed wants, I guess, but it's not key either. But
Again, we don't always get what we want, right?
exactly, exactly,
I do
exactly.
see we have some
Uh,
comments here as well, where we
mhm.
see here that we had someone says that I think gold will be bearish following what we have already seen on charts. So I'm thinking, basing on what this specific comment has stated, is that the
And
specific trader feels that the market might have priced in the weaker dollar already, and we could see some pullbacks today, regardless of which result we actually get, which is also a really interesting standpoint to take.
Let me just share gold with you as well, since so here is the 1 hour gold price action. I've seen that the correction has already, we have seen a bit of a correction from 2051 highs, mainly in the Asia and European session.
Yeah, we had
So
that drop back down to 2035.
absolutely, but I can see that intraday momentum is like stubbornly on the upside. It's stubbornly positive. There is on the anticipation of the data. I can see that is well supported. So it looks that the correction, from a technical perspective at least, the correction has is done. It's over. Even though we could quickly have a pullback if we have a surprise today. But
Mm.
yeah, there's a very interesting zone over here. 20. You mentioned 2035, or so sorry, I missed.
It was just
Which
the
was it?
low point reached was around 2035, 2035.5
2035.
around
Yes.
there.
Yeah, absolutely. 2035. Yes, the latest, the day's low could has already acted as a nice support level, but it could be retested again um, as soon as we have the data out. Yeah, momentum I can see intraday that remains above 50 zone, flatten a bit, so consolidation that justifies the consolidated this a bit the indecision that we have seen the last few sessions. Overall, however, still on the upside with further room for further room to the upside as well. Just a quick reminder, I don't know whether we mentioned it earlier, regarding I have put the weekly chart on, guys, okay? This is the weekly chart on, just, just because I wanted to show you how important, how strong this resistance area have been for the last 3 years. So, any thoughts? Any thoughts regarding, from a technical perspective, do you believe that we're gonna have another, possibly a higher high, or reversal once again for a fourth year in a row on that level? That's
From a technical trader's perspective, looking at that specific resistance, especially on such a high time frame, like you said, yearly high, a 3-year high actually.
yeah.
So again, I think we are going to see a significant amount of pressure here. And again, now we're going to have to look at what the GDP data is giving us. As if we do get that slightly stronger GDP, by all means, then yes, that resistance can be respected and we could see some pullback. But if we get a surprise today, it would really be interesting. And I personally feel that if that resistance gets broken today, that we could see a significant rally because it is such a big, such an
Mm-hmm.
important resistance level that hasn't been broken in a very
Okay.
long time. If that actually does give in, that the rally could be quite significant that follows.
Look at that. That's since 1999. Nevertheless, another
So
5 minutes to go. Let's check a bit the questions. Just,
someone asked here for
ooh,
NASDAQ as well.
yeah, why not? Let me put it on.
And then we still have the debate going. I think it might go bullish. So it's still not, our traders are not agreeing here. That there's some saying sell, some are saying buy.
Oh, oh, and that's quite reasonable if we consider the uncertainty that and the mixed data that we have seen out of US. But as I said, I'm a bit on your side on this one. So, okay, this is NASDAQ. I had a five wave. That's why you've seen these lines on. But let's,
Andrea, your
yes.
screen is not showing yet.
Oh, really sorry for that. I thought I was showing my screen. So you couldn't see gold earlier.
No, no, no. We could see gold. We could see gold. Thank you. There
Oh,
we go. Nasdaq's
oh.
back up.
So yeah, I had this is daily chart. I had I still have possibly five wave over here formation, but as you can see, like it has stacked. Let me just zoom in, guys, so I will make it this easy for you. Okay, over here. So there's a lot of ranging for the last 7 days in a row, 8 days in a row. Still the 161.8 Fibonacci expansion from this latest up leg that I spotted on October is still not really. It has been retested several times, but still the price remains below it. I'm referring to 16,100 and let me be precise, 178 level. Obviously, we've seen a break of our year's highs, the 16,000 territory. Sorry, and intraday, I think that chart doesn't help. Let me put the an intraday setup as well, a short-term one. So that's a 4-hour chart. Decreasing momentum intraday, and this is a 4-hour chart. We have a bit of a mixed signals out of our momentum indicators. Have you seen this? MACD keeps
Yes.
getting lower. Very interesting. Is it a sign of a potential diversion or something? Hmm. Hmm.
Could potentially be as well. It also looks there that your RSI at the top, correct?
Yes.
Is also approaching that overbought area as well.
Hmm.
So even looking at those technicals, on that intraday level, there could be some pullbacks. So definitely some possibilities there.
It's a nice recovery though. The last few sessions, but very narrow Bollingers as well. A certainty prevails. Yeah, but you're right. That is it has already breached the overbought territory. Still further steam to the upside, but a lot of mixed signals over here. A lot of mixed signals. Everything depends on what you said earlier, on if it managed to break on the release uh, such a historical resistance level. So, oh, a minute to go until the data are out. So allow me to go back to the calendar. Mhm. Here we are. Already out, my dear friend, 5.2%. Beating expectations. Let me refresh this.
Which is very interesting because I'm currently looking at a gold chart as well, and we are seeing very little movement after the release so far.
Look at this. It's because it's a bit mixed. The core missed expectations, but the overall, the headline, the third quarter preliminary reading beat expectations. So that that's a bit so that's a bit of a
So
mixed report, I could
again, we
say.
have that good news, bad news all at one time, and now we have a stalemate. So
Let me get back
gold
to the
is
gold.
pushing a little bit higher at the moment. So we are seeing gold pushing higher, slightly, not significantly just yet. So
Mhm.
there is that slight rally. On the other hand, Nasdaq has pushed up quite a bit. So
Let
um,
me. So I'll put the 30 minutes chart.
I think that'll be the
And let's,
easiest. Yes.
yeah, 30 or even 15 minutes chart if you prefer, just to see. Hmm. An indecision is what I can see. Both gold and Nasdaq have been a bit dodgy af- on the release. Let me just and you can you see my screen?
Yes. Yes. Yes.
Okay, okay. There's a bit of a delay. I'm sorry about that. It might be my end. Sorry guys, which pair is this? So right now I have a 15 minutes chart for Nasdaq. Okay, Victor? So that was the very last comment. I'll hide it. So we are right now on the Nasdaq 15 minutes chart. We're seeing a bit of a mixed of a lot of cautiousness, I think. Maybe markets don't know how to interpret this the mixed announcement. Let me try and find the the breakdown of the release that might help to see why exactly. What was? Is it still the spending? Is it anything related to food? Is it? Let me just have a quick check. So let me see the breakdown so we can discuss it further. As I can see over here, consumption came lower than expected, the personal consumption. The final reading, let me just, okay, sorry, just give me a second. Personal consumption slightly lower. The finals, no, I don't have the full breakdown over here. Mm, no, let's wait a bit to see what led to this such a mixed release. I guess that the responsible for course decline might be also imports as well, because we have seen a bit of a decline in imports earlier this week. But yeah, let's wait and see. So a lot of indecision still. Holding, that's Nasdaq. I still have Nasdaq on. You see that the floor, the last two sessions floor has not been retested. This is a 15 minutes chart, but we have seen a bit of a fight between bulls and bears right now. A lot of mixed.
Big one. Very
Yeah,
big one.
I guess that was the same with for gold, right? You were checking gold earlier.
Mm.
Let me just put gold as well. Okay, 15 minutes chart extended below the okay, extending to 2039. Looks that bears took a bit the control, at least in the very short time frame right here. But still,
Yeah.
guys, 2035 is the key level to be closely monitored, right? So we
I
do
think we could
understand.
actually I think we could push down a little bit to that specific area for a bit of a retest. And then even on the 30-minute time frame, it could form that double bottom. So
Mm-hmm.
this is definitely a possibility. And yeah, just in that near term as well, because of the fact that some of our data that we got was good. We did get that higher GDP, so we could see that slightly stronger dollar just near term. And then as there's more clarity, because basically you also just went and looked for it, as we get that more clarity on the report, we could see some changes within sentiment within the market going forward.
Exactly, exactly. So as long as we don't see a decisive break below it, that will remain just an immediate floor for any potential, allowing me to say, buying the dip. Um, buying the dip uh, performance. Okay, so yeah, let's see a bit the questions until I have the further
I do
feedback in
see here
regards to
we
the
do have some
breakdown.
questions that. Oh, firstly, let's just celebrate some of our traders here today. So we have some traders who traded Euro USD with us here today, who made some profits. So let's start off there by saying very well done. Um, and then we actually do have a question here, which I think is very interesting. I'm going to pop that up. So saying how is Euro USD looking going forward? And I think this is also very important because we did talk about, you know,
Mm-hmm.
this specific indicator. Now I know a lot of times, yes, there's a lot of excitement trading these high impact events and trading the spikes and all that. But a lot of times we forget as traders that these specific events have a massive impact on our trading for the next 30 days, for the next few weeks. And how do we take the data that we just received, even though we got some mixed data? How do we use that now going the into December, into our trading during this year end? And I think that is such a brilliant question. So
To that.
thank you so much for that, Victor.
So I actually put on the euro dollar since Victor asked for it. Considering other than today's data, okay, considering stay strictly on the technicals and that break that we have seen, another actually key move that we have seen since yesterday was the breakout of 61.8 Fibonacci level, the most important actually Fibonacci retracement level, with the asset with euro dollar actually holding so far today well above it. So that from a technical perspective, and because you can see I have drawn, I don't know whether you can see it, it might be our faces might be on top of my RSI. Let me try to fix a bit. um, I have I have put a trend line on RSI. That's the daily chart euro dollar. So I've seen that still we have a rising trajectory on RSI, some corrections, some pullbacks, but holding to the upside. So still in an upwards channel, if we actually upwards trend line without any indication about a reversal. I'm referring to the medium or even long-term time frame. So there is no indication of a reversal of the so far nearly 2 months, no, 1 month and a half uptrend that we have seen, that bounce away from the 104 territory up to 1010. Actually 1010 was retested this morning. Yes, this morning as well, and yesterday night. So the overall view remains on the upside, obviously with 1075, the line that I have drawn over here, to be the very next and actually the historically the most important resistance levels, at least for the year, for 2023, because it used to be a nice a strong actually resistance level that hasn't been broken since June to be more precise. So it used to be a nice resistance levels in 2020 and 2022 up to the mid of 2023, eventually broken, reverted down, and now it's now converted once again as to a key resistance level. So 110.75 is the very next level to be closely monitored in euro dollar, with momentum increasingly bullish still. So intraday, though, we might see some corrections, but as you can see, even today, we had a bit of a pullback, but still 61.8 Fibonacci level holds actually as an immediate support. There is another more short-term one, just 5, 6 pips away from the 61.8 level, but still nothing to indicate that we have any reversal on this more than a month upwards level. What do you think for that one, for euro dollar?
I agree with what you said here, and I think this goes back to what we discussed earlier with
Yeah.
regards to trade what you see and don't trade what you feel,
Hmm.
and exactly using our supply and demand levels, using that support and resistance, and using such a key level such as the 61.8% FIP, which is our golden zone. So if we do have that golden ratio and we can stay above it, and that becomes our new support level, then yes, near-term trajectory, answering the question, what is Euro USD looking going forward? As long as we can stay above 60, that 61.8% Fibonacci level, then we are going to push higher to that very, very nicely pointed out significant resistance that you
Hmm.
have available on your chart at the moment. But let's look at the flip side of the coin. If 61.8% FIB breaks, then we could see a
Yeah.
sell further down to that 50% FIB level once more.
Yeah, because after all, comparing, it's all about comparing economies, right? In this case, we're comparing Europe with US. And as you already know, guys, we don't have any positive, optimistic signs from the European economy, from Eurozone and such. Even the latest Germany data indicate that there is a lot of sluggish, let's say, recovery. Yeah, I will say sluggish. So there is still looking ahead. Europe is in a very, very difficult position, especially the fourth quarter. So it's what Francois said. In the near term, yeah, we could see a retest of that level, but a pullback and a move below our immediate support could actually spark further decline, because after all, the overall picture, at least from the fundamental perspective, supports a weaker euro than dollar, because both, we could say that both are expected to be weak, right?
Right.
Next year, but which weaker? This is key. Which of the two is weaker in comparison with the other? Um, so,
It's that whole thing of we don't have a strong one or a weak one. We just have one that is weaker now. So, and it's actually sad
yeah,
to think that two of our largest economies in the world, this is now the discussion that we are having. Another question that we got coming through here from
yeah.
David asked us, does Nasdaq and gold move opposite? And so I'll
Mm.
take that one if you don't mind. So, David, the
Yes.
answer here is yes. Sorry, Matt.
Let me, can you share David's question so I
Of
can, I
course, of course.
missed it a bit. Oh,
There you
thank you
go.
for that. Would you like me to set the chart side by side?
Yes, that would be
Oh,
very beneficial, and then
I
I
will
can
do
take the
my best.
discussion from there.
Preferable time frame, guess daily chart, I guess, or
Yeah, daily, hourly doesn't really matter. I think we're gonna see something similar anyway.
true that, true that. Let me just, I'll do my best. So here we are.
Here we go, and this is daily,
Sorry, I put the hourly one, but yeah, let me
hourly.
let,
Okay, no,
let, let
hourly,
me put
hourly is
daily.
fine.
It's fine. Okay. Okay.
Hourly is fine. Um, okay, perfect. So, yes, if we do look at both of these, you can see similarities. Remember, you are never going to see the same chart. So, you will always see correlation, and there's a certain percentage of correlation between the two. And we have to understand how the various economies and how these two specific instruments get affected by the dollar. So when we look at a weaker dollar, and this is normally bullish for gold, this pushes gold higher. This is normally good news for gold, etc. Because why? This means that Interest rates are going to be decreasing. So for non-yielding assets such as gold, this is good news.
Mhm.
Then, when we look at our stock index, which we are also seeing here, which is our NASDAQ 100, now we have to understand what type of companies we are looking at. Because exactly the statement I'm going to make now is not the same statement you can use for the S&P 500 or for Dow Jones, because when you are looking at NASDAQ 100, you are looking at companies that are very sensitive to interest rates. So again, very similar to gold, when we are seeing a stronger dollar, when we are seeing a good GDP like we just saw, now we are seeing gold decrease a little bit. Why? Because there's a slight possibility that interest rates could now stay higher. This same market sentiment then spills over into NASDAQ. And if market sentiment still remains the same, where there is that possibility of interest rates remaining higher, this doesn't bode well for a index fund such as Nasdaq 100, because these companies are extremely interest sensitive. But when we look at something, for instance, like the Dow Jones Industrial Average, within that specific index, we have companies such as hedge funds, banks, etc., that are welcoming to higher interest rates because this is a system in some way. So this is why you will see that these specific events will not always affect Nasdaq and Dow Jones the same way, but to an extent you will see a certain correlation between Nasdaq and gold. Just
Definitely.
remember that when we have geopolitical events such as the Israel and Hamas event that we just had in October, this will cause a rally in gold, but not a rally in Nasdaq, because then gold's safe haven status kicks into place, and where Nasdaq doesn't have that same effect. But when we are looking at high impact events such as the GDP, then we could see a certain correlation. I hope that answers your question, though, David.
I think it does. I actually would like to add on it, even though I don't believe it's one of the biggest movers of these two indices precisely this year, but there is some kind of a seasonality traditionally in November and December for Nasdaq and for gold, but for Nasdaq for sure is they consider to be traditionally two of the best months of the whole year. Exactly, because as you said, its components is companies, so it's the earnings season. Is also as we move on to the end of the year, we have also is the end of the taxable year as well. So that also affects the corporate sector, and as a consequence, the Nasdaq as well. So two of the best months traditionally for Nasdaq is November and December. In general, the last quarter of the year. So actually, if I'm not mistaken, I think for November we had a rally up to 9%, if I'm not mistaken, for
For this
Nasdaq.
year so far.
Yeah, I think so.
Yeah,
I
it isn't that ballpark. I know when I had a look as well, if you look the year to date, actually from where we started the year, NASDAQ is actually up
mm,
50% already. So it
that is
has a significant rally since January already. And yes, for the month of November as well, so far it has been performing really, really well.
yeah. But look at that. Excellent, excellent. Let's move on to the next question. We have further questions about gold. Let me just scan a bit to see whether um, we have anything. What direction should starters like myself take, please, long or short? We're not here, I'm afraid, Maria Bruce, to tell you what to do, right? We can help you actually educate yourself and learn how to what the my financial markets are, how to in general develop yourself as a trader. But unfortunately, cannot tell you what to do. So what I would like to tell you is firstly, take a step back, you try to read any educational material that you have. Join our classes, our webinars, in order to educate yourself and remain up to try to keep yourself up to date also with the news, not only the market news in general, anything that is going on in the economy globally and in your local economy as well. This will help you develop in general as a trader, as an investor, uh, as a human being as well. Why not? So okay, we have just stick on the comment section a link in which you can register and participate, attend some of our seminars and any general education educational sessions that we have. So
I'm going to post the second link just now. So, for those of you here today, the first link. So, I saw that we did have a few comments saying, I'm new,
mhm.
I need a lot of help with the basics. So, if this is you, if you are new to trading, you need help and you need help with those basics, that first link that I posted to the trading education seminars, that's with me, as well as my
Mhm.
colleague
Mhm.
Dennis. So, please attend that. That's where we're going to teach you the basics. That's where we're going to teach you how to look at the market, how to analyze, how to approach the market, and then build you from there. Once you have graduated from that process, then you can move on to the second link that I shared with you, which is with Andrea, where she's then going to take you through specific topics such as how to master certain indicators, how to use
How to
different
trade
trading
news.
strategies, how to trade news, exactly. So all of that then goes into that. So yes, you can start with me. I'm going to teach you the basics, and she's going to make you an expert. So that's how this team works from there onwards. So yes, please use those links that will be pasted in the comment section.
Yeah, we have everything on the website, guys. Events, seminars, webinars, anything that any session that we provide, obviously for free for our clients and for everyone that is interested to educate himself. So feel free to visit our website and more precisely the links. Check the links that Francois provided, and that will be your very very first step. Um, Potentially to get involved into the financial industry, and why not succeed on it, why not? So it needs a patient, though. We need patience. It's constant learning, right? I
Lots and lots of patience. And if you don't have patience, the market will teach it to you. So, yes, lots and lots of patience.
have,
Andrew, I think we have one last question, and then if you want to, we can wrap
yeah,
it up. Do you have something
yeah,
to add?
yeah. Just before, I see you're referring to the goal questions, right?
No, no, no,
Or
no.
there's another one. Okay, before we check the last few questions, I have in front of me the breakdown from the report, actually the full report from the GDP. Just to mention that
Awesome.
the reason uh, the reason that we have some higher revisions on GDP was mainly due to the increase in inventories, something that I completely forgot, and government spending. Actually, these were the two key components of the report that explain this higher revision. So at some point when the government spending slows down, these gains, such gains that we have seen, like today's one, will possibly be reversed. So in terms of the market, the slower consumer spending might be also the takeaway from this report. What else? In income consumer is struggling. Yeah. But as I said, the key was the increase in inventories and government spending, apparently, for the upwards revision, because all the rest reflected the exact opposite, a downwards revision. Uh, so yeah, okay, interesting, very interesting. I wasn't expecting inventories to affect that much the GDP number, but good to know. So yeah, let's check the last few questions before we um,
Is there anything
round
you
it
still
up.
wanted to add on gold? Because I think that was, there are some,
I
I
don't
think we've
think
said,
so. Don't think so. Still, let me just double check that you can see my screen. Yes, this is gold. I put it back
yes,
on. Still, our 2035 level support level still holds. Um, so yeah, nothing really. A lot
it
of
is
consolidation.
bouncing a bit on that moving average, eh? There's a bit of a,
Y-
as it was rejecting that moving average, pushing a little bit higher again.
Actually,
So there's
this
that
is my
possibility as well.
yeah, that's my exponential, by the way, just to explain what I have on. It's 20 and 50. But yeah, bouncing, but it's the 20 period, this is the 1 hour chart, sorry. The 20 period exponential moving average has flattened. So yeah, absolutely, it keeps retesting it, it bouncing and bouncing on it, but um yeah, it has flattened. So that looks to be just a further consolidation as we move on. Actually, in the near future, in the next few hours, it looks like it's more of a neutral mode,
Very
right?
possible.
Yeah. Mm.
Very possible. So we did
So
have another question here regarding Nasdaq as well, but I don't think we have to put the chart up. So it basically just says which
mm,
US companies highly affect the performance of the Nasdaq. So I think this is also one of those questions that we need to understand that Nasdaq is also not an evenly weighted index. So we have certain companies that make up a very large part
yeah,
of this specific index, and if you actually joined our new colleague, Michalis, last week, he actually went into depth on this specific index and how to trade it and how to analyze it and so forth. And during that session, you would have learned that companies such as Apple, Microsoft, Tesla, Google, these companies, even NVIDIA, so looking at those five companies specifically, those five, if you just look at that, that is the majority of the movement within Nasdaq. Even though yes, there's 100 companies, but focusing on those big five companies will give you the general trend of what the specific index is doing.
exactly. Yes, have a look on Mihaly's analysis on Nasdaq. Yes, that will absolutely help you. And uh, okay, you mentioned that some of the key, actually, the might be up to, I don't remember what the precise percentage, but the big boys, Apple, Microsoft, Amazon, Nvidia, I think they are the top four, isn't it, of Nasdaq components. So
Yeah,
you cannot,
yeah,
I
top
think
five.
so. Yes,
I
yes.
went. I think I said Microsoft, Tesla,
Tesla, yeah,
Google, um, Amazon, and then Nvidia. Those five.
Nvidia,
Yes,
yes. So um, definitely, actually, well, not only affecting the performance of Nasdaq, but maybe driving the performance of Nasdaq, isn't it? Literally driving it.
absolutely,
So,
absolutely.
yeah, so that's pretty much it, guys. If there are no further questions, we're gonna call it a date. So, no?
Well,
Okay.
I think from my side, as always, it's been an honor. Thank you so much. Thank you for everyone who attended as well. Thank you for your participation. And just from my side, have a blessed day.
Thank you. It was a pleasure as well. So, hopefully, you enjoy it, guys, and take care. Good luck, and see you again next time. Bye.